It is impossible to track and trade them all. Therefore, traders need to focus on the index options with the greatest amount of liquidity or that meet a specific need. For example, if the strategist wants to track the semiconductor sector, either the PHLX Semiconductor Index $SOX or the GSTI Semiconductor Index $GSM will work. However, when trading, one index clearly offers important advantages over the other, namely, the options on the SOX are much more active and liquid. Later, we describe an even better way to capture changes in the chip sector. International indexes. Although not as prevalent, there are a few international indexes listed on the U.S. exchanges, see Table 2.6. For example, the Amex lists options on the Amex Japan Index $JPN, the Hong Kong Index $HKO, and the Eurotop 100 EUR. Meanwhile, the CBOE trades options on the CBOE China Index $6, the CBOE Asia 25 Index $EYR, the Euro 25 Index $EOR, and the CBOE Mexico Index $MEX. The 5-year note index $FVX, the 10-year note index $TNX, and the 30-year bond index $TYX are vehicles some traders use too. Table 2.5 ICE Sector Indexes. ICE Indexes. Ticker. ICE Biopharmaceuticals Index. RND. ICE Gold Index. HVY. ICE Homebuilders Index. ROOF. ICE Integrated Oil and Gas. PMP. ICE Oil and Gas Services. OOG. ICE Semiconductors Index. BYT. ICE Index. SIN. ICE US. Regional Banks. JLO. ICE CCM Homeland Security. HSX. 18. The Index Trading Course. Table 2.6 Rate Indexes. International Indexes. Ticker. Exchanges. Amex Japan Index. JPN. Amex. Hong Kong Index. HKO. Amex. Eurotop 100. EUR. Amex. Asia 25 Index. EYR. CBOE. China Index. 6. CBOE. Euro 25 Index. EOR. CBOE. Mexico Index. MEX. CBOE. Monitor and profit from changes in interest rates. The indexes actually represent the current rates afforded to various government bonds. For example, the 10-year note index reflects the current rate on the benchmark 10-year Treasury note multiplied by a factor of 10. Figure 2.1 shows the index's performance from May 2004 through April 2005. Notice that it has been rising. This tells us that the price of the 10-year note, which moves in the opposite direction of the actual bond, has been falling. Figure 2.1 10-year T-note, May 2004 to April 2005. Source: www.profitsource.com. The Index Market Today. Exchange Traded Funds ETFs. 19. An index can be used to track markets and sectors of the market. When options are listed on an index, they can also be used to trade the market. Similarly, exchange-traded funds ETFs can, and often are, used to track and trade markets and sectors of the market. As we will see, ETFs have one important advantage over indexes: shares can be bought and sold like shares of stock. Let's consider a few examples of some of the more actively traded exchange-traded funds. The Big Three: Qs, Diamonds, and SPDRs. There are 3 exchange-traded funds that all options strategists should know and understand. The Nasdaq 100 Index Share QQQQ, or Qs, is among them. It is one of the most actively traded investments today. Unlike an index, the Qs trade on the Amex similarly to a stock. In essence, the fund represents a pool of money that invests in the same stocks, in the same proportion, as the Nasdaq 100 Index. As we saw earlier, the Nasdaq includes the top 100 non-financial stocks that trade on the Nasdaq stock market. Basically, the QQQQ is an investment vehicle known as a tracking stock because it tracks the performance of a specific index. In addition, the QQQQ is designed to equal 1/40th of the value of the Nasdaq 100 index. For instance, on Thursday, February 27, 2003, when the Nasdaq 100 was quoted at 1,000, QQQQ was trading for $25 a share, or 1/40th of $1,000. Therefore, the QQQQ is a fund that allows investors to buy the entire 100 stocks of the Nasdaq 100 index in just one share at a relatively small share price. The Dow Jones Industrial Average (DIA) or Diamonds made its debut in 1998, with options on the fund initiated in 2002. Similar to the QQQQ, the Diamonds trade on the exchanges like shares of stock. However, the DIA holds the same 30 stocks as the Dow Jones Industrial Average. Therefore, it is a tool for trading the Dow. Diamonds are designed to equal approximately 1/100th the value of the industrial average. The S&P 500 Depositary Receipts (SPY), or SPDRs pronounced SPDRs, is an exchange-traded fund that holds the same stocks as the S&P 500 index. The Amex began trading the S&P Depositary Receipts in 1993. Each share of the SPY is equal to approximately 1/10 the value of the S&P 500 Cash Index (SPX). Therefore, when the SPX reaches 1,200, the SPDRs will trade near $120 a share. Options on the fund didn't begin trading until 2005 due to licensing issues but quickly joined the DIA and QQQQ options as some of the most heavily traded contracts. iShares. Another family of exchange-traded funds is called iShares. Each iShares fund closely tracks a specific market index. They are similar to the Qs, the Diamonds, and the SPDRs that each iShares is an exchange-traded fund and can be bought and sold like shares of stock. In addition, the fund holds a selection of stocks, which is a portfolio created around a specific index. For example, while the DIA tracks the Dow Jones Industrial Average (INDU), the iShares S&P 100 Fund (OEF) attempts to mimic the performance of the S&P 100 Index (OEX). There is also an iShares Mid Cap Fund (MDY), an iShares Russell 2000 Small Cap Fund (IWM). Sector ETFs. Some iShares funds are used to track popular market averages while others are created around specific sector indexes. For example, the iShares Dow Jones U.S. Financial Sector Index Fund (IYF) tracks the price and yield performance of the Dow Jones U.S. Financials Index, which consists of bank, insurance, real estate, and general finance companies. Table 2.7 lists the iShares sector funds and ranks them by trading volume in early 2005. The iShares Biotechnology Fund (IBB) is the 20THE Index Trading Course. Table 2.7 iShares ETF symbol iShares Exchange Traded Fund Average Daily Share Volume IBB Shares Nasdaq Biotechnology 1,517,200 IY Shares Dow Jones Real Estate 969,600 IG Shares Goldman Sachs Software 206,000 IY High Shares Dow Jones Healthcare 153,900 IYA Shares Dow Jones Energy 140,700 ICFI Shares C&S Realty 137,200 IYZ Shares Dow Jones U.S. Telecom 88,600 IG Shares Goldman Sachs Semiconductors 71,200 IG NI Shares Goldman Sachs Network 54,600 IY Shares Dow Jones U.S. Tech Index 54,100 IDUI Shares Dow Jones U.S. Utility Sector 44,300 IG Shares Goldman Sachs Tech Fund 30,400 IYFI Shares Dow Jones U.S. Financials 1,700 IWC Shares Small Cap Index 1,500. 21. The Index Market Today. Most actively traded. Other funds are created around healthcare, telecommunications, semiconductors, and software. Interestingly, there are two iShares that track real estate stocks. One of them, the iShares Dow Jones Real Estate Fund (IYR), is the second most actively traded iShares fund today. This fund is one of the few ways investors can trade a basket of real estate stocks. The iShares Russell Microcap Fund (IWC) consists of some of the smallest companies that trade on the U.S. stock exchanges. It offers traders a unique way of playing trends related to lowest capitalization stocks. Traders interested in trading specific sectors of the market can use the iShares as tools for placing bets. Options are listed on most of these funds. However, not all of the contracts see very much trading volume. Therefore, investors will want to focus on those funds with the most activity, or the ones that appear closer to the top of the list. In addition, Table 2.7 doesn't include all of the iShares. It includes only those created around U.S. sectors. For a complete list and the product specifications for each ETF, readers are encouraged to visit the American Stock Exchange website www.amex.com. Select Sector SPDRs. Shares of the 9 Select Sector SPDRs trade on the American Stock Exchange and can be bought and sold like stocks. Like SPDRs, they represent ownership in a basket of stocks. However, rather than holding the stocks of the S&P 500 index, select sector SPDRs are created around specific sectors, financials, technology, utilities, etc. Collectively, the 9 sector SPDRs hold all 500 of the S&P 500 stocks. Table 2.8 lists the 9. Table 2.8 Select sector SPDR. Select sector SPDR. Symbol. Healthcare. XLV. Materials. XLB. Energy. XLE. Financials. XLF. Industrials. XLI. Technology. XLK. Utilities. XLU. Consumer staples. XLP. Consumer discretionary. XLY. 22. The Index Trading Course. Select sector SPDRs. Options are listed on the 9 funds and are used in examples later in this book. Therefore, options strategists seeking to participate in the rise and fall of specific sectors can implement strategies on the various select sector SPDR funds. Holding Company Depositary Receipts. Holding Company Depositary Receipts (HOLDRs) are unique investment vehicles that allow investors to buy and sell entire baskets of stocks in just one transaction. Created by Merrill Lynch and trading on the American Stock Exchange, HOLDRs are a type of exchange-traded fund that allow investors to buy and sell stocks in a particular industry, sector, or group. Again, semiconductors, oil services, and biotechs are represented, among other industries and groups. Additionally, while investors can use HOLDRs as specific groups of stocks, there are options listed on most of these investment vehicles, so they can be useful to the option strategist as well. Table 2.9 provides a complete list of HOLDRs. Notice that each fund is created around fairly narrowly based industry groups. For example, there are business-to-business B2B Internet HOLDRs, broadband HOLDRs, and software HOLDRs. Each holding company depositary receipt holds shares in 20 different companies. Each investment has a unique ticker symbol and trades on the American Stock Exchange like stocks. For example, an investor might instruct a broker to buy 100 shares of BBH. Once the transaction is completed, that investor will own 100 shares of biotech HOLDRs. HOLDRs stands for Holding Company Depositary Receipts, which are exchange-traded funds that hold baskets of stocks from specific industry groups. HOLDRs trade on the American Stock Exchange and can be bought or sold in lots of 100 shares. For example, investors can buy or sell biotechnology HOLDRs BBH, semiconductor HOLDRs SMH, or oil service HOLDRs OIH. In all, the American Stock Exchange offers trading in 17 different HOLDRs. Options are also available on these exchange trade funds and can be used to profit from trends related to specific sectors or industry groups. Holding company depository receipts can only be purchased in round lots of 100 shares. Each 100 share purchase gives the buyer ownership interest in a specific number of shares in different companies. For instance, Table 2.10 shows the number of shares of each company. 23. The index market today. Table 2.9 Various holding company depositary receipts HOLDRs. Holding company depositary receipt. Symbol. Biotech HOLDRs. Broadband HOLDRs. B2B Internet HOLDRs. Europe 2001 HOLDRs. Internet HOLDRs. Internet Architecture HOLDRs. Internet Infrastructure HOLDRs. Market 2000 Plus HOLDRs. Oil Service HOLDRs. Pharmaceutical HOLDRs. Regional Bank HOLDRs. Retail HOLDRs. Semiconductor HOLDRs. Software HOLDRs. Telecom HOLDRs. Utilities HOLDRs. Wireless HOLDRs. BBH. BDH. BHH. EKH. HHH. IAH. IIH. MKH. OIH. PPH. RKH. RTH. SMH. SWH. TTH. UTH. WMH. Within the Internet HOLDR's HHHA 100 share purchase gives the owner 18 shares of Amazon.com AMZN, 8 shares of Real Networks RNWK, 24 shares of eBay, and so on. After purchasing a 100 lot of any given HOLDRs, investors can elect to break apart the investment vehicle into its individual stocks. That is, they can instruct their brokerage firm to deliver their HOLDRs to the trustee and pay a cancellation fee of up to $10 per round lot of 100 HOLDRs. Then, the shares of each individual company within the holding company depository receipt are delivered to the brokerage account. In short, by canceling their HOLDRs, the investor can take delivery of the individual stocks that comprise the fund. According to the American Stock Exchange, with HOLDRs, you can own a group of stocks as one asset or unbundle them to own each of the underlying stocks and then trade them individually to meet your tax or investment goals. This feature also facilitates more advanced portfolio strategies without requiring you to monitor each of the individual stocks. As mentioned previously, options are also available on most HOLDRs, so traders can use these investment vehicles to implement bullish, bearish, or neutral trades on specific industry groups. We provide some specific trading examples using HOLDRs in later chapters. Once again, it's 24. The Index Trading Course. Table 2.10 Various Internet HOLDRs. HHH Component Stock. Symbol. Share Amount. Ameritrade Holding Corp. Amazon.com Inc. CMGI Inc. CNET Networks, Inc. DoubleClick Inc. eBay Inc. Earthlink Network, Inc. E-Trade Group Inc. McAfee. Priceline. Com Inc. Real Networks, Inc. Time Warner Inc. Yahoo Inc. AMTD. AMZN. CMGI. CNET. DCLK. eBay. ELNK. ET. MFE. PCLN. RNWK. TWX. YHOO. 9.0. 18.0. 10.0. 4.0. 4.0. 24.0. 6.2. 12.0. 7.0. 1.2. 8.0. 42.0. 26.0. Worth noting that when implementing a trading strategy, we seek liquid contracts. International funds. Trading on the New York Stock Exchange under the ticker symbol FXI, the iShares FTSE Xinhua China 25 Index Fund (FXI) is an exchange-traded fund that holds the same 25 stocks as the FTSE Xinhua China 25 Index. The China 25 Index, in turn, is a benchmark developed jointly by the firm FTSE and the Xinhua Financial Network. It was created to track the performance of China's leading companies. Options on FXI are available and provide a tool for trading trends related to the Chinese equity market. In October 2005, the American Stock Exchange announced that it would begin listing options on the iShares MSCI Japan Fund (EWJ). The fund provides investors with a unique way of participating in the performance of the Japanese stock market. It is an exchange-traded fund that tracks the performance of the MSCI Japan Index. The EWJ is one of several country-specific indexes created by Morgan Stanley Capital International (MSCI). According to the firm's website www.msci.com, each MSCI country index captures 85% of the total country market capitalization while it accurately reflects the economic diversity of the market. Therefore, the stocks within the EWJ represent roughly 85% of the market value of the Japanese equity markets. Table 2.11 shows the fund's top 10 holdings. 25. The index market today. Table 2.11 Top 10 stocks of the iShares MSCI Japan Fund. Stock weighting: Toyota, Canon, Takeda Pharmaceutical, Mitsubishi Tokyo Financial, Honda Motor, Sony, Mizuho Financial, NTT Docomo, Matsushita Electric Industrial, Sumitomo Mitsui Financial. 5.68%. 2.39. 2.27. 2.07. 1.99. 1.96. 1.88. 1.73. 1.64. 1.51. Investors interested in owning a piece of the Japanese market can buy EWJ shares. The listing of options on the EWJ is noteworthy because the fund is one of a family of international ETFs that trade on the AMEX. Table 2.12 shows the full list of funds. Investors can buy and sell shares of each fund throughout the day based on the outlook for the specific country. For example, if investors expect markets in Germany to move higher, they can buy shares of the EWG. Alternatively, if Hong Kong stocks are expected to fall, the EWH can be sold short. Later we describe a trading system that can be used to trade these international funds. Until October 2005, options on the international funds were not available. That changed, however, when the Amex introduced EWJ options. The move opened the door to options trading on some of the other funds. The timing of future listings will probably depend on the success and popularity of EWJ options. Gold play. The Street Tracks Gold Shares Exchange Traded Trust (GLD) made its debut on the New York Stock Exchange (NYSE) in November 2004. "We are very proud to list the Street Tracks Gold shares on the New York Stock Exchange," said a November 18, 2004, press release posted on the exchange's website www.nyse.com. Trading under the symbol GLD, this new exchange-traded fund holds gold bullion. It is therefore unlike other gold funds and indexes such as the PHLX Gold and Silver Mining Index (ZAO), which hold shares of gold mining companies. This new fund holds the yellow metal itself. It is a pure play on gold prices. The price is set at 1/10 the value of gold. So if the precious metal is near $441, the 26. The index trading course. Table 2.12 Amex International. ETFs. Ticker. Country. EVA. EWO. EWK. EWZ. EWC. EWQ. EWG. EWH. EWI, EWJ, EWM, EU, EWN, EWS, UE, EWP, EWD, EWL, EWT, EWU, Australia, Austria, Belgium, Brazil, Canada, France, Germany, Hong Kong, Italy, Japan, Malaysia, Mexico, Netherlands, Singapore, South Korea, Spain, Sweden, Switzerland, Taiwan, United Kingdom. Fund will trade around $44.10 a share. As of this writing, there are no options available on the GLD, however, that will probably change over time. Bond funds. In April 2003, the CBOE and Amex both announced the launch of options on the iShares Lehman 20-plus year Treasury Bond Fund (TLT), the iShares Lehman 1 to 3 year Bond Fund (SHI), and the iShares Lehman 7 to 10 year Bond Fund (IEF). All three funds hold government bonds, but each is different in terms of maturity. For instance, SHI holds short-term notes that mature in 1 to 3 years, but TLT holds long-term bonds like the 30-year Treasury bond. The funds started trading in 2002 and options on the bond funds started trading approximately a year later. Most active by share volume. Indeed, the success of any index or ETF options contract will depend on investor interest. Some simply don't fly, and the lack of volume and liquidity makes them unattractive. The Nasdaq QQQ is the most actively traded, and most liquid, ETF today. Average daily share volume is in the millions. Table 2.13 ranks other exchange trade funds by trading volume during 2005. The Dow Jones Diamonds DIA, which holds the Dow 30, also made the list. The select sector SPDRs are gaining popularity. These funds hold the same stocks as the S&P 500 index, but grouped by sector. For example, the Select Sector Financials (XLF) and Energy (XLE) funds are among the most active ETFs today. Many of the holding company depositary receipts also trade actively. Examples include the Biotechnology HOLDRs BBH, the Semiconductor HOLDRs SMH, and the Oil Service HOLDRs OIH. Table 2.13 shows only exchange-traded funds because it is not possible to buy and sell shares of an index like the S&P 500 index or the Dow Jones Industrial Average. However, it is possible to trade options on many of the cash indexes. In Chapter 4, we list the ETFs and indexes with the most active options contracts. Most of the strategies discussed later in this book focus on this group of index products, along with the ones included in Table 2.13. Conclusion: given the increasing interest in exchange-traded funds and index trading, exchanges have been quick to launch a variety of new products designed to appeal to investors. As a result, index traders have a large number of investments to choose from. The downside, however, is that there are the index market today 27 table 2.132005 ETFs ranked by trading volume, shares, name symbol Nasdaq 100 QQQQQQQ Semiconductor Hold RSSMH Dow Jones Diamonds DIA Russell 2000 Small Cap Fund IWM Select Sectors SPDRs Financials XLF Select Sectors SPDRs Energy XLE Midcap SPDR SMDY Select Sectors SPDRs Basic Materials XLBI Shares Long-Term Bond Fund TLT Oil Service Hold RSOIH. 28. The Index Trading Course. Many to track and trade. Savvy strategists need to understand what products exist in order to apply the perfect tool to fit a particular need. For example, as we demonstrate later, a strategist who is looking to protect or profit from rising interest rates might set up bullish strategies on the TNX or bearish trades on the TLT. However, when looking for products to use regularly, like in a trading system, it is better to use those that have the more active shares and options contracts. And that includes those on the list in Table 2.13 and in Chapter 4. Chapter 3. Trading. The market. During a bull market, the stock market is buzzing with activity. The investment public is actively buying and selling shares and trading volume increases. For example, in March 2000, technology stocks were on fire. On the Nasdaq stock market, average trading volume approached 2 billion shares a day. Today, a little more than 1.5 billion shares trade hands daily. The dollar volume related to trading activity is even more telling. At its peak, the dollar value of daily trading activity on the Nasdaq surged to $100 billion. By the end of 2002, the number had fallen to only $20 billion. The rise and fall of the Nasdaq from 1998 to 2002 provides an example of two different types of market environments, a surging bull market and a tumbling bear market. Bull and bear markets have existed throughout history and will continue to exist far into the future. Prices rise and prices fall. As prices move higher and lower, trends develop. These trends can last from a few days to a few decades. More often than not, the development of the trend is based on fundamental developments. For example, bull markets in stocks begin when the economy is expanding, corporate profits are growing, and investors are willing to buy shares. At the same time, trends can only last as long as investor psychology remains supportive. Bull markets continue as long as investor sentiment remains positive and upbeat. In fact, bull markets often end when investor optimism reaches unsustainable levels, or when bullishness reaches an extreme. It is the dynamic interaction between fundamental developments and crowd psychology that dictates the strength and duration of 29. Bull markets. Understanding this dynamic, and how to view events as they unfold with index charts, is a key element to becoming a successful index trader. Bull versus bear markets. A bull market is characterized as a period of rising prices. It gets its name from the fact that bulls buck up with their horns. A bull market can occur in stocks, bonds, gold, or even in the market for a fine red wine like a Chateau Margaux. Any investment, asset, or security that has a market with changing prices can witness a period of rising prices, a bull market. In the stock market, bull markets are easy to identify. Investors feel confident as stock prices rise and portfolios increase in value. You can hear colleagues or acquaintances boast about their stock returns at work or dinner parties. The media pays greater attention to the stock market's performance, and there is a general sense that all is going well in the corporate world and the economy. During bull markets, investment banks are selling shares of initial public offerings (IPO) faster than hot dogs at the ballpark. For example, in March 2000, investors were falling all over themselves for the latest technology IPO. When trading activity is robust and the public is active in the market, investment banks can generate hefty fees for bringing new companies to the market. As a result, in 2000, a record number of new offerings hit the market, as more than 400 companies brought new stock to the public. In addition, shares would sometimes jump 100, 200, or 300% during their first day of trading. The IPO market died a couple of years later, and investor disinterest kept the market quiet for years thereafter. Mutual funds have steady inflows of cash during bull markets. When investors see their 401 kiloseconds and retirement accounts increase in value, they add more money to their mutual funds. In March 2000, investors poured $35.6 billion into stock mutual